Well, g'day there traders and friends right around the world. Thanks for joining me on this Monday afternoon market recap. Having a look at the Dow Jones Industrial Average, today we saw the market sell off close to 100 points. What is interesting about this most recent sell-off is that we're coming down and we're starting to retest old resistance which was established in September 2014 as possible and all likelihood new support. As you can see, we do have both an upper and lower lick on the daily candlestick. This isn't really telling us too much other than the fact that sentiment is beginning to become confused, i.e. traders are really deliberating, trying to understand which direction the market is going to move as we continue into this week's trading. Now again, you can see the 100 simple moving average coming very, very close to that support level or where the daily price action is taking place. You can see again this lower level of resistance turn support, which is really being influenced and interacted around price at the moment, very close to 17,140. This is a very logical area as to where price can begin to slow in the most recent sell-off, stabilize a little bit before we get the next turn up higher. This is going to be key. It's going to show us whether the market is going to continue in the bullish trend, break out above old resistance swing highs, or if in fact option 2 is we bounce and we set up the lower swing high relative to the swing high in early December 2014. This is setting us up for what we call a 1, 2, 3 reversal type of chart pattern. Again, this is a little bit into the future. It may not develop until late December, early January 2015, but I will keep you posted obviously with the daily price action which we receive. You can see the same picture, a similar picture on the S&P. S&P today was down 12.5 points. You can see that we're running into old resistance which is acting as new support. We're sitting right on that 100 simple moving average. Again, this is the perfect location where we would expect the market to at least transition into a sideways consolidation short term before we see the next bounce high. If I have a look at the oscillating indicators, you can see that they are beginning to move into oversold territory. The MACD is very reluctant to get into that. The same with the stochastics, but the RSI, generally what happens is when we get this far oversold on an index or on a market, you see a very quick bounce to the upside. All you have to do is go back and reference to the last 2 or 3 times when we were into oversold levels. You can see the market adjusts very, very quickly. That of course is looking very, very promising given where the markets are trading at the moment. Again, the Nasdaq has broken out most recently in the month of November. It has retraced a little bit. It's come back down into this new pivot point or this old pivot point, a very important macro pivot point. You can see that we are quite a way still above the 100 simple moving average. Today's daily candlestick is what we call a bearish Moabozu engulfing candlestick. On Friday last week, we had a shooting star and we also had a gravestone doji on Thursday last week. So the Nasdaq in and of itself is looking quite bearish. We do have what we call an evening star reversal candlestick. This is a 3-day candlestick pattern over here, which is really set up a little bit of a bear flag and then the absolute or the ultimate breakdown which we're seeing in the Nasdaq market. It is resting on that 50 exponential moving average. It is on that old resistance as new support. The oscillating indicators are sort of moving into oversold territory. It doesn't mean that it's the end of the move, but just saying that, look, the markets are going to need some time just to rest a little bit. We're in that lower Bollinger Band. It's starting to break down. I wouldn't get too carried away with an overall Bollinger Band trend trade at this location. If we have a look at some individual stocks today, Apple was on the verge of breaking down. You can see this very lower wick on the daily candlestick. Pretty much another engulfing candlestick pattern. It's showing up exactly where I expect it to. It is still trying to hold that 50 exponential moving average. It looks as if we have closed below it short term. It's not enough to start entering into bearish positions yet. I'm still looking at that 106.72 entry, but have a look at where this congestion and slowdown is taking place. This lower wick is going back to the price action congestion where we set up that stair-step continuation pattern in early November 2014. Expect Apple to really move sideways here, to slow down, let the overzealous buyers and sellers shake out before we get that next impending directional move. Amazon today, no real directional move. It's still setting up that stair-step pattern, potentially going to break to the downside. It still hasn't moved yet. The same with Baidu, a little bit of a bearish engulfing candlestick pattern today. No overall major net volume. We are still moving sideways right on this very important pivot point. Very bidirectional sort of trade setup on Baidu. Caterpillar today gave you an option or another option to exit out of this short where we got in at 97.66 today. It did sell off another 75 cents. We are down here at about $89.75. If you're not out of this particular stock, I would be out of this and I would be closing my positions, giving it a couple of days to rest before I start anticipating continued further downside. It is very overextended to the downside. Disney today is giving us another bearish engulfing candlestick pattern. We do not have the complete confirmation of a breakdown. If we break below Monday's low, just below 90.25. It is going to be an incredible short, I do believe, down to $87.60 on that particular stock. Please keep an eye on Disney. FAS continuing to break down. You can see that we have this green perspective box saying, look, this is where we expect it to hold before it bounces on the bullish side. So we're starting to come down and influence and interact within these green boxes. We still haven't seen, of course, the reaction, or the possible reaction, I should say, of the bounce. It is going to set up over the next couple of days. Please stay patient on FAS. Facebook today, another bearish engulfing candlestick pattern right at this gap resistance. So I had a lot of people emailing me and say, look, I want to get involved in calls on Facebook first thing Monday morning. I'm saying, look, be careful. There's no confirmation to start entering into any bullish positions on FAS. This just sums up that price action 100%. We're down about 84 cents on the daily. It's just not a good compelling buying opportunity based on the risk and reward, and the overall trade confirmation just isn't there yet, coupled with the fact that we have some incredible divergent signals, multi-month divergent signals setting up since August 2014. This is very, very bearish based on this exhaustion gap, what could be a complete reversal gap. We're trying to fill it right now. We'll soon see what happens. I really like the 74.65 bearish entry on Facebook. Google today starting to break down below 517.70. If you are in this trade, I would put my stop just below the daily candlestick or above the daily candlestick and see what happens. We do have a target down here at $509.40. The bigger macro entry, which I'm looking at, is really 502. If we get some serious closes below 502, watch the bottom of Google fall out. That is something to keep updated, or at least keep on your watch list over the next couple of days. Halliburton today, another sort of inside day bearish candlestick. Overall, the net movement isn't really doing a whole lot since this 38.48 entry. We're really moving sideways. Expect this to bounce. I mean, really expect it to bounce. If you are in this stock, I would put a stop above Monday's candlestick high. Give you literally a couple of cents risk on this particular trade, but I can definitely see this bouncing up into this perspective box to see and wait for it to give us another clear reversal to enter in short. The same is true with Netflix. Again, we hit our target at 331. This is the trade setup up in this box. We're not here yet. I'm expecting a short-term bounce, which is ultimately going to be shorted in the future. Starbucks today breaking down below 82.48. We had our stop right here at 82.48. We had a contingent order open above $84.56 to say, look, I want to get involved if it breaks above or breaks out of this stair step pattern. That wasn't the case. We mitigated our risk. We didn't enter into calls because of the chart pattern. We always need confirmation before we do so. So what we've done is a really important lesson for many people who are learning how to trade the stock market. Yes, things can look good, but of course the picture can change very, very quickly. As long as you mitigate risk, then it's okay as a trader, okay? At the moment, Starbucks is breaking down. People are asking me and emailing me, should we start shorting this stock? It's not something which I'm looking at based on the fact that we have a very strong breakout. We're starting to trend bullish, you can see. We're just simply bouncing off the 10 and the 20 exponential moving average. Yes, volume did pick up today on the daily, but it's not enough for me to really get carried away on shorting Starbucks. Tesla today, another bearish engulfing candlestick pattern. Boy, that has been pretty common across our top 13 individual trade lists. We're very close to that target at $201.10. What I'd be doing again would be mitigating my risk. I'd be bringing down the stop, which we had placed at 212.50. I'd be putting it above the high of Monday's candlestick. It's only going to take off a couple of bucks of risk, but it definitely is going to, of course, mitigate risk in the event that Tesla sees a bullish bounce, much like we're expecting on the markets coming up. And to conclude with today, we have Twitter. Twitter today, we have a bearish counter attack. It did gap up, but it traded and pretty much closed at the closing price of Friday's candlestick. It is a textbook bearish counter attack. It's pretty much saying that, look, there are sellers at this location. It does fall very, very nicely at our perspective box right here. It's not enough to start entering short. People are saying, look, does this look like a bear flag? Technically it does. There is decreasing volume, and if you couple that with the exponential moving averages, it is the perfect location to start considering a short. I do believe, however, we are going to move up slightly higher before we see the reversal. All right, before we see that reversal. So thank you very much for watching this Monday afternoon market recap. I'll be back, of course, on Tuesday afternoon to give you another market recap. Until then, ladies and gentlemen, stay safe. Happy trading. Goodbye from James from Pivot Point Trading. Have a great night. Goodbye.